Hello and welcome to oliveboard platform and very good morning to all of you. Hi, good morning everyone. Okay, so we are starting a very important chapter for your SSC preparation. Not chapter, actually we are starting a subject, and the subject name is economics, right? So in a banking currency system we can you need to cover some basic topics, especially in economics part. See, for example, you can start your economics with a very basic chapter that is banking in the currency system, right? Your next step should be, so we are discussing a little bit syllabus here, right? So the next chapter we can handle, that is your RBI or the Reserve Bank of India, or you can call it as a monetary policy, or basically RBI, right? There's a very important tool which is used by RBI or Reserve Bank of India to control the market, right, which is the monetary policy. And please mark my word, do not try to skip this chapter, because this chapter is really plays a very important role in your all type of examination and all type of questions as well, right? Now, thereafter your next step should be inflation. Inflation is very simple chapter to understand actually. Initially you need to understand the basic definition of the inflation, then after the causes of inflation, the types of the inflation, the measurement to control the inflation, and the measurements to inflation. Okay, so these are the basic concept we need to take in a inflation part. Now your next chapter should be after the inflation, that is your national income. Okay, national income, basically in a case of national income you need to cover the basic factors like GDP, GNP, NNP, NDP. These are the major factor you need to understand in a case of national income, right? After the national income you can cover or basically start a fiscal system. In a case of fiscal system, we need to understand the financial markets, especially, for example, the financial market like money market, like capital market, etc. Then after, regulatory bodies, very important. Regulatory bodies, for example, RBI is also a regulatory body because it controls the whole money market, right? Then after SIDBI, then after SEBI, NABARD, NHB, these are the regulatory bodies, okay, which actually control the separate industry or the sector. For example, ADA, there's a regulatory body which completely regulate or control the insurance sector, right? So regulatory body. And two chapter which plays a very important role in your economics part. First is economic planning. Right, in economic planning, basically you need to cover the planning commission, but as you know that planning commission doesn't exist, so we need to cover the Niti Aayog concept. Okay, so Niti Aayog, the Niti Aayog structure especially, then after Niti Aayog framework, Niti Aayog indexes which is launched by the Niti Aayog, very important, है ना? Then after, because we are also covering a planning commission, so initially we need to cover the all 5-year plan as very important. So 5-year plan are actually important because a lot of question has been arise from the 5-year plan. As we know that 5-year plan doesn't exist, but so still they plays a very important role. So at least your 12 5-year plan with the target growth, with the achieve growth, with the concept they introduce via planning, via 5-year plan, right? The duration of the annual plan, the duration of the plan holiday. So these type of question usually arise from the planning commission or the economic planning. Apart from this, a very important, most important chapter, that is your census 2011. Census 2011 is actually very important. I will suggest you that please go through the complete previous year question, whether your previous year question of SSC CGL, SSC CHSL, MTS, your railway examinations, right? Each and every examination you will receive these questions from the census 2011. So this is my humble request to do not skip this chapter ever. Okay, so this is a complete syllabus, especially in a case of economics, and today is the first class. Definitely we can start a very basic and the first chapter, that is your banking and the currency system. So currency system basically in India, as we already know, in a case of currency system is rupee, Indian rupee, right? But before currency, we need to check from where this rupee is coming, है ना? So first of all, starting with a very basic definition, that is bank. So what is bank? What is bank? So actually bank is a financial institution, right? Licensed to receive deposit, make loans, withdrawal money, right? Exchange and safe deposit, etc. Everything, or we can say each and every service which is associated with the finance part is handled, controlled and regulated by a one financial institution, and that financial institution is termed as bank. Okay. If we talk about a Vedic age, there was the existence of bank, not bank, but yeah, kind of a type of institution we can say who handle these financial services. There was during the Maurya Empire. We have seen a completely part, or we have seen a completely witness of financial system in a Maurya Empire. Then after later on, each and every empire used to create a one financial structure in their empire, right? When Britishers captured India, they also built a proper financial institution, and those financial institution is termed as the bank. Okay, so let me tell you here from here that what are the founded banks of the India, basically during the independence or after independence, right? Okay, first of all, the history of banking in India. Your history, so globally the story of banking has much common, as it we know it evolved with the money lenders accepting deposit. Even in during this time also, the rural personalities, or basically the half of the population who belongs to rural area, they used to take a money not from the bank, they used to take a money from the money lenders only. Okay, then after deposit, issuing receipts in their place, according to the Central Bank Inquiry Committee 1931. Money lending activity in India could be traced back to the Vedic period, that is your 2000 before Christ to 1400 before Christ. Even the currency system, you can find this currency system even in a Indus Valley civilization, right? We had the evidence of the coins as well as the stamps, right? Now, the existence of professional banking in India could be traced to 500 before Christ, that is Kautilya Arthashastra, dating back 400 before Christ, contain reference to creditor, lender and lending rate. So actually during the Maurya Empire, we have seen a clear image of a financial statements or the financial system basically. Now, in a case of early development or the early phase of Indian banking, so the Western variety of joint stock banking was brought to India by the English agency, okay, House of Calcutta and Bombay. The first bank of a joint stock variety was Bank of Bombay. This was the first bank which was established in 1720 in Bombay. Clear? This was your first joint stock variety bank, Bank of Bombay, established in 1720, where? Bombay. Now, This was followed by the second is Bank of Hindustan in Calcutta. Actually, initially, this bank is considered as the first bank of India. That is your Bank of Hindustan. It was established in Calcutta after a 50 years of Bank of Bombay. That means in the year 1770. Okay. Now, this agency house in Hans the bank was closed down in 1832. Actually, we are experimenting the financial sector through a different financial institution. So that is why during experiment, definitely sometime we successful, sometime we have to face a failure. Same in a case of Bank of Hindustan in Calcutta, basically due to the financial glitch, due to the mismanagement or multiple factor, closed this bank in the year 1832. But the public know the concept of banking system, public got the concept of banking system. So that is why the General Bank of Bengal and Bihar, which was came into existence just after 3 years, that is in 1773. After a proposal by late Governor General Warren Hastings, proved to be short-lived experiment. Clear? Okay. So ultimately from this slide you can pick important 3 points. First point, a joint stock variety was Bank of Bombay, 1720 Bombay. Okay. First is your Bank of Hindustan. It was established in Calcutta and established in 1770. Followed by Bank of Bengal and Bank of Bihar in 1773. Clear everyone? Now, then after we saw the era of Presidency Bank, as the Presidency's area got their own financial institution. So that is why they built their own Presidency Bank. Now, the first Presidency Bank, very important, has been asked in your examination multiple times. The first Presidency Bank was the Bank of Bengal. Okay, established in Calcutta on 2nd June 1806. Please mind the date as well as year plus location plus bank name. Okay, see, Bank of Bengal, 2nd June 1806, Calcutta, with a capital of 50 lakh. The government subscribed to 20% of its share and capital and shared the privilege of appointing director with voting rights. Okay. Now the bank had the task of discounting the treasury bill to provide accommodation to the government. The bank was given power to issue notes in 1823. Leave it. Just keep in mind the Bank of Bengal 1806. Now, on the other hand, the Bank of Bombay was the second Presidency Bank established in 1840. Okay, capital 52 lakh capital. Third is your Bank of Madras. This is a third Presidency Bank established in July 1843 with a capital of 30 lakh only. See, first bank, Bank of Bengal, 1806, Calcutta. Second is your Bank of Bombay, 1840, Bombay. Then after your Bank of Madras, 1843. Okay, in basically established here. Now, we have 3 banks. First is, see here, first is Bank of Bengal plus Bank of Bombay plus Bank of Madras. So, BBM you can take a short note or take a trick. Madras. Okay, now, these 3 banks, actually individually these 3 banks were not going so much properly. They also faced some issues. So later on, we actually created a one typical action on this, that we have seen the merger of these 3 banks. Okay. The Bank of Bengal, Bank of Bombay, Bank of Madras got merged into each other, and finally a one bank is formed which is termed as the Imperial Bank of India. Imperial Bank of India. This is considered as the first merger. Okay, now Imperial Bank. So the three presidency bank, Bank of Bombay, Bank of Madras, Bank of Bengal. Okay, which were set up between 1809 to 43. Okay, amalgamated into the Imperial Bank of India in which year? 1921. Okay, now the role of the Imperial Bank was that a commercial bank, a banker's bank, and bankers to the government. Initially, we want that Imperial Bank can handle each and every control, each and every function, the management, the operations, regulation, demand and supply of money, issuing of notes, vagera vagera. But Imperial Bank actually denied for this kind of function, which is termed as a central bank. Later on, this Imperial Bank of India got nationalized as the State Bank of India. So actually, this is a complete story of your State Bank of India. Let me tell you again. See, Bank of Madras, Bank of Bombay, and Bank of Bengal. Right? These three banks merged together in the year 1921, termed as Imperial Bank of India. Right? Then after, this Imperial Bank of India renamed and nationalized as State Bank of India, or you can call it as a SBI. Clear? Any doubts here? Okay. Now, post-independent evolution. So after independence, so this was the complete development of the pre-independence. Okay. Now, any doubts from this section, from this area? Any doubts? No? See, after independence, what happened? At the time of independence, banks were under private ownership of the Maharaj or the kings of the princely states of India. These banks used to serve rich families and the industrial houses only. And this narrowed the growth of banking system. To overcome these limitations, the government in consultation with the RBI, actually during this time period, RBI, the Reserve Bank of India, actually formed. Okay, we will see the separate story of the Reserve Bank of India in a separate lecture, as this plays very important role because when we are covering the State Bank of India, right? So we need to cover the monetary policy as well. Okay, so it takes around 1 hour completely. So that is why we are not covering this RBI part in this series. We will cover in your next lecture, that is your tomorrow. Okay. So to overcome these limitations, the government in consultation with the RBI enacted the Banking Companies Act in 1949, renamed as the Banking Regulation Act especially. Next. Bank consolidation. So basically the RBI accelerated the task of consolidation in the first 15 years of independence, when the scope of the Banking Companies Act was widened. Between 1954-66 to 17, weak banks were either amalgamated or liquidated, or their liability and assets transferred to the other bank. In order to enlarge the reach of the banking service, the government nationalized the Imperial Bank of India by converting it into the State Bank of India. See here. So in 1921, right, these banks merged together and called it as a Imperial Bank of India. The issue was, after independence, the issue was basically the public of India trust only in those entities where the government share stake is high. Okay, because people trust in government of India that time. Okay, so because banks doesn't have a government share stake, So we finally decide, or on the recommendation of Indira Gandhi, we decide the nationalization of the banking, in which the high share stake given to the central government or the government of India, and another share stake will be merged or enjoyed by the private entity. So in the year 1955, we actually nationalized Imperial Bank of India as the SBI, or the State Bank of India. Clear? Now, so this was a complete story of SBI, the State Bank of India. Now, the ownership of SBI was vested with the Reserve Bank, which has now been transferred to the Government of India. After the one merger, or after the one nationalization, the first mass nationalization of the banks took place in the year 1969. Okay, 14 banks were nationalized to promote macroeconomic objectives such as economic growth, better regional balance of economic activity, and diffusion of the economic power. The nationalization was effected by an ordinance which was later replaced by an act of parliament known as the Banking Companies Acquisition and Transfer of Undertaking Act 1970. Then after, in the year 1980, the six banks again nationalized in the year 1980. So actually we have seen the first nationalization took place in the year 1969 with the 14 banks. Then after, in the 1980, around 6 banks again nationalized in the year 1980. So after 1980, around we have 20 nationalized banks. Clear? Okay. Now, as we already know the idea of the bank, so a lot of banks basically formed, and even we have seen a merger recently. We have seen a merger, right? So finally, there are a lot of type of banks in India. Private bank, there are public sector bank, there are development bank. So what is the type of structure of the banks, or the type of bank? See, the type of banks, basically banks are divided into a 3 broad category. First is scheduled bank, second is non-scheduled bank, and third is your development bank. Scheduled bank, basically the bank which comes under RBI Act 1934 Schedule 2nd. Okay, those banks which are mentioned under the second schedule of RBI Act 1934 are termed or called it as a scheduled bank. The banks which are not mentioned in RBI Act 1934 Schedule 2nd are termed as a non-scheduled bank. And development bank, basically these type of banks usually participate in the development or give financing service or finance to the growth of specific sector for their development. Okay, now there is a further classification of the scheduled bank or the non-scheduled bank, but see the difference first of all. Scheduled bank meaning, scheduled bank is a banking corporation whose minimum paid up capital is 25 lakh and does not harm the interest of the depositors. Non-scheduled bank are the bank which do not comply with the rule specified by the Reserve Bank of India, or say the bank which do not comes under the category of scheduled bank is termed as the non-scheduled bank. Second schedule, so listed in a second schedule, all the scheduled bank, not listed in a second schedule. Scheduled banks is always maintained by the RBI and they has to maintain their CRR. In a case of a non-scheduled bank, they has a CRR, but they have to maintain their CRR with themselves. Okay. Borrowing. Scheduled banks are allowed to borrow money from RBI for a regular banking purpose. Non-scheduled banks are not allowed to borrow money from the RBI for regular banking purpose. Returns to be submitted periodically. No such provision of providing returns. Members of clearing houses, it can become a member of clearing houses. It cannot become a member of clearing housing. Okay, so there's a difference between the scheduled bank and the non-scheduled bank. Okay, so first of all, we are going to cover the structure of the scheduled bank. Okay, so the structure of the scheduled bank, basically, just a minute. Okay. So the structure of the scheduled bank, basically, we already know that what is scheduled bank, right? Now the scheduled bank is RBI Act 1934 second schedule. Okay, those banks basically divided into two parts. First is commercial sector bank. Second is cooperative bank. There's a further classification of cooperative and the commercial bank. First is your commercial bank. Commercial banks are basically further divided into four parts: public sector, private sector, foreign banks, or the RRB, that is your regional rural bank. Okay. Okay. Now, as you can see, the first classification, that is your commercial bank. So what is commercial bank? Basically, commercial bank is the one whose primary business is, commercial bank is the bank whose primary business, is to deposit and withdraw. Deposit and withdraw the amount, basically, as well as giving the loans is the basic necessity and the primary function of all kind of commercial bank. Clear? Okay. Commercial bank in India originally focused on providing short-term loan, especially for the agriculture, for the trade system, for the industry system as well. Okay. Commercial bank are basically, these banks deal directly with the customer, unlike the development bank. So deal with directly with the customers. Okay. Now, these banks are further classification. So first is your public sector bank. Public sector banks are one in which the government owns the majority. Okay. Government owns the majority of the share. Okay. For example, SBI is the public sector bank. So SBI share is 58.60% government. Okay, in a case of RBI, 58.60 share stake is shared by the government of India. So ultimately, those banks which whose ownership has the majority, especially, are termed as the public sector bank. Okay. Now, private sector bank, basically the private entity or any private agency owns the majority, right? Public sector bank examples: SBI, IOB, PNB, etc. Private sector bank, for example, ICICI, for example, HDFC. Okay, these are the banks of basically your private sector bank. Okay. Now, next is a foreign bank. So ultimately, foreign banks are those banks whose headquarter is located out of India. Simple, right? And they have a branch which is operated in India. It's termed as the foreign bank. Okay. There are around 46 foreign banks. For example, HSBC, you have heard definitely. HSBC. You have heard of Citibank. Citibank is also a foreign bank. HSBC is a foreign bank. Royal Bank of Scotland, you have heard. Royal Bank of Scotland is also a foreign bank. Okay, clear? Now, the next scheduled bank is the cooperative. So actually, cooperative have all along been playing a very vital role in the development of the rural area. So cooperative bank is a financial organization that belongs to its member. That belongs to its member with varied banking and financial services. Okay, now RRBs or rural bank, basically rural, they have a rural development bank or basically some rulers bank. Okay, now your scheduled bank, then after non-scheduled bank has a different classification, that is your differentiated bank and the cooperative bank again, small finance, payment and the local area bank. Now the development bank. So development bank has the different segregation, as you can see here, that is your industrial development bank, agriculture development bank, export import development bank and housing development bank. Basically industrial development banks are the banks which provide or basically provide the facility of the refinance or the loan, especially for the development of the industries, right? But on the basis of amount of loan, they are divided into two parts. First is all India and second is the state level. If it is all India, for the large scale industry, for the small scale industry. For example, for the all India large scale industry, IFCL, IDBI, IRBI, ICI are the main industrial banks. For small scale industry, SIDBI is the main industrial development bank. In a case of agriculture, NABARD, then after SLDBs and PLDBs, basically branches. Export Import, Exim Bank, NHB, National Housing Bank. We will cover these important organizations in our regulatory bodies or basically in a regulatory type of thing. Okay, now in each and every bank, there's a type of accounts basically they provided, right? First of all, the type of बैंक अकाउंट नहीं बेटा, दिस इज अ पेड बैच और ये डेमो है आप लोगों के लिए यूट्यूब पे. तो हमारे पेड बैच में तो ऑलरेडी काफी सारे बच्चे मुझसे पढ़ रहे हैं, आप यहाँ पर अकेले हैं, ठीक है. सो अगर आप भी हिस्सा बनेंगे तो आप पेड बैच का हिस्सा बनिए, ठीक है. ये जस्ट डेमो क्लास ही है आप लोगों के लिए जो कि प्रोवाइड करी गई है. और कल से ना मैं आपको इस पे दिखूंगी ना आप मुझे. यहाँ देखिए, based on the purpose, frequency of transactions, location of accounts, basically holders and bank offer a bucket of the bank account. So actually in each and every bank there are 4 type of bank accounts, okay, and these 4 type of bank accounts are divided on the basis of 2 things. First is a demand. See, the first type of account are based on a demand, okay, and second is on the based of time. Clear? Now, on a case of demand, that means you can deposit amount, you can withdraw the money from a bank on any time or in any number, right? On a case of demand, there are 2 type of bank account. First is saving account and second is current account. Okay. In a case of time, that means if time is bounded, right? In this case, there are two type of accounts. First is recurring account, or you can call it as a RD, and fixed deposit account. Or you can call it as a FD. Okay, see here. RD is basically as simple as that. See, 500 rupee for 5 years. That means this is a time foundation. You have to pay your 500 rupees for a next 5 years. Clear? That means time bounded. Fixed deposit 50,000 rupee. Okay, 50,000 rupee for 5 years. Again, time deposit. Okay. Saving deposit, anytime you can deposit the amount, anytime you can withdraw. There is no time limit. That means it is based on your demand, right? Not on your time. Same case in a current account. Once a particular bank gives a business in these 4 accounts is termed as the NDTL. You will receive this term in a RBI monetary policy, especially that is net demand time liability. Okay. Okay, so this is basically these are the 4 type of bank account you can see, especially in a case of banking structure. Now read the terms, especially here. First is your current account. Current account basically is a deposit account, especially for the businessmen. Okay, for traders, for business owner and entrepreneur who need to receive payment more often than others. Okay, these accounts hold more liquid deposit with no limit on the number of transactions per day. The current account allow with overdraft facility, that is withdrawing more than what is currently available in the account. Also, unlike saving account where you earn some interest, these are zero interest bearing account. You need to maintain a minimum balance to able to operate current account. Now, next is the saving account. Saving account basically it is a regular deposit account where you earn a minimum rate of interest. Here, the number of transaction you can make, okay, each month is capped. Bank offer a variety of saving account based on the type of depositor, feature of the product, age of the purpose of holding the account and so on. Now, these are the regular saving account for children, for senior citizen. I think we have all seen a biggest financial inclusion, that is your Jan Dhan Yojana, hai na? For women, for example, for a women, the Bandhan Bank is completely, not completely, but a lot of members of the Bandhan banks are women category. Institutional saving account, family saving account, and so many more. You have to basically you have the option to pick from a range of saving product. These are the zero balance saving account and also advanced one, which feature like auto sweep, debit card, bill payment and cross product benefits. Now, there is one very important committee which plays a very important role in a public sector bank, especially here. That is your Narsimhan committee. I think we have seen this question in a previous year question as well, that which of the following committees associated with the banking part or the banking structure. So Narsimhan committee is the main committee who is connected with the banking structure C. The first Narsimhan committee was made in 1991, made the following recommendation, especially for the growth of banking sector. First is a 4-tier hierarchy for the Indian banking system with 3 to 4 major public sector banks at the top and rural development bank for agriculture activity. So basically they recommended that in India there should be a 4 to 5 major kind of public sector bank, and especially for the rural development, to cater the growth of the rural area, to cater the rural public especially. They also initiated the financial or the development activity, especially in agriculture or the rural area. A quasi-autonomous body under RBI for supervising bank and financial institution. Reduction in statutory liquidity ratio, that is your SLR. Now SLR, basically it is the minimum rate of interest which is maintained by a public sector bank with themselves, either in cash, government security or gold as well, right? Now deregulation of interest rate, that means there should be a same interest rate is given by the bank to each and every customer. Full disclosure bank account and proper classification of assets, setting up assets construction fund. Then after the Narasimhan Committee second in 1998, this committee is also known as the Banking Sector Committee. The task of the committee was to review the progress of the implementation of reform and to suggest a design for further strengthening of the sector. Okay, now, so this is a complete part of your banking system. In a case of currency, as we already know that there's a India is completely covered, or their financial structure is completely covered by a currency part. So the Paper Currency Act came in 1861 to confer upon the government of India the monopoly of note issue, thus ending the practice of private and presidency bank issuing currency. So that means between the year 1861 to 1935, the government of India managed the issue of the paper currency. Later on, this particular power given to the RBI. In 1935, when the RBI started operation, it took over the function of the note issue from the office of the Comptroller of Currency, Government of India. Currency management, basically the management of the currency is one of the core central banking function, especially controlled and managed by the Reserve Bank of India, okay, along with Government of India as well. Now, in consultation with the government, the Reserve Bank routinely address the security issue and target ways to enhance security features to reduce the risk of counterfeiting or forgery of currency note. Next is coin. Basically, there are various coin in India. They came in different size and value as the rupees of 1, 2, 5, 10 and 20. Okay. The maximum denomination of coin can be issued of rupee 5,000. That means the the Government of India can also create a coin of maximum 5,000 rupee. Banknote maximum 10,000 rupee. Okay, matlab a one note of rupee 10,000. Clear? Okay. Now, I think you have seen a question like this: which of the following portrait or which of the following motif is you will find in a 500 rupee note or a 100 rupee note, right? See here. First of all, your 500 rupee note. So 500 rupee note, the color is a stone grey. Size is 66 millimeter into 155 millimeter. Portrait of Mahatma Gandhi at the center, Ashok pillar emblem on the right. Basically, this observes is same for each and every note. Motif will be changed. Reserve red fort with Indian flag and Swachh Bharat logo with slogan. Red fort with Indian flag and Swachh Bharat logo with slogan. Okay, in a front, Gandhiji. Next, 200 bank note. 200 bank note, color is bright yellow, size is 66 millimeter into 146 millimeter. Portrait of Mahatma Gandhi at the center, Ashok pillar emblem on the right. Reserve motive of Sachi Stup and Swachh Bharat logo. That means 200 rupee Sanchi Stup. 100 rupee note, color is lavender, 66 millimeter into 142 millimeter. Portrait of Mahatma Gandhi, same. Motive of Rani Ki Baab. Rani Ki Baab is located in Gujarat. Next is 50 rupee note, again. Motive of Humpy with chariot. 20 rupee note, motive is Ellora Caves. 10 rupee note, chocolate brown color, 63 millimeter to 123 millimeter. Motive of Sun Temple, that is Konark, is mentioned on a 10 rupee note. Okay, so this is 10 motive of Konark Temple. 20 basically your Ellora Caves. 50 Humpy. 100 rupee note, Rani Ki Baab. 200 Sanchi Stup. 500 Red Fort with Indian flag. Okay. Okay. Now there are some digital currency and financial inclusion also we have seen. So there are some National Payment Corporation of India. Just a minute. NPCI has launched the UPI system to revolutionize the Indian digital payment spaces. Mobile wallets are also there. Government initiatives. Okay. So here we have completed some important case of banking currency system and the banking part. Okay. To all the paid students, if you have any doubts, definitely you can mention in our comment box. And all the YouTube students, hi. So basically this was a demo class of your newly launched batch, and the newly launched batch's name is here. We are targeting SSC CGL, so here with the new course. SSC CGL Tier 1 Score Booster Course 1.0. So this is a class of this batch, and definitely in a Hindi medium, in English medium, you can opt this class anytime. Okay. You can also join me at 11 AM for the SSC CGL mock test, which was held on 5th and 6th April. Okay. So thank you so much. We'll meet you in our next class. Bye-bye and take care.